To take this discussion further and to analyze the impact, we have Harshvardhan Dole of IIFL, who tracks the power space very closely. Harsh, hi, afternoon, and thanks for joining in. The first and most basic question is, how prepared is Coal India to achieve this production target of or dispatch target of 507 million tons? And what are the key challenges you think Coal India could encounter now?
Well, I think the first single most change that has happened over the last 12 to 15 months is both power and the coal ministry are now headed by a single person. There have been a lot of bureaucratic changes, and there is a definite attempt to cut down the bureaucratic delays and cut down the systemic inefficiencies. There is an intent to scale up the production, and I think with these forces behind, definitely Coal India is very much equipped to grow the production from what they were to about 10% per annum in times to come. If one gets into nitty-gritties, I think they would need to definitely invest in some of the high-end machinery so that the systemic inefficiencies within the mining side are addressed over the next few years. But I think that will get addressed once the 5-year plan as to how the ministry wants to double the production is clear, and that is what the coal secretary said, that they should make it public over the next couple of weeks' time.
Okay, so let's talk about how our viewers or our investors can benefit from this. Which are the power companies that could stand to benefit from the eventual rising production from Coal India, and which are the companies that one should invest into now?
See, there are two parts to it. One is, if you look at the entire power sector, there are certain assets which have signed PPAs and which are operating below their optimal PLFs for the reason there are inadequate coal supplies. Such power plants will tend to benefit in the first leg, that is over the next 12 to 15 months, when the actual coal offtake increases and the plants who are ready to generate power will be able to ramp up their PLFs. The biggest single beneficiary, if I were to point out, will be someone like an NTPC, which has got plants up and running. The newly commissioned power plants have not been running at optimal level for the reason the coal linkages have been a bit of an issue. The important part is the company has got 100% PPAs in place, with fuel being a pass-through. Even ACBs will be much more comfortable to offtake this kind of low-cost power. The state electricity boards also will see an improvement in PLFs. On the private sector, the benefits will of course be very selective, and it will be restricted only to the companies who have signed long-term PPAs. And if I were to name a few, it will be someone like a CESC's Haldia unit, which is likely to commission over the next 6 to 8 months, and which has signed 100% PPAs with its own distribution entity. Tata Power's Maithon, which has been running below the optimal level of PLF. So the benefits will be actually very selective in the first leg. In the second leg, as the coal supply improves, and that should incentivize the state electricity boards to sign more and more PPAs. And that's where the majority of the upcoming power sector projects should tend to benefit. But that is something at least 18 months from here on to me. In the short term, I think NTPC and select players like Tata Power or a couple of plants of Adani should be definitely benefiting.
Okay, so you see the second leg starting only in 18 months from now, or the effects to be seen 18 months from now?
See, a lot depends on how efficiently and quickly the state electricity board's financial health is revived. There were attempts made almost 12 months back to restructure the debt which was there on their books, but somehow it has not fructified. The actual therefore power offtake has been muted, and it's been actually linked to the increase in the domestic coal production, and therefore the increase in production rather generation from plants linked to thereof. So till the time the fiscal health of ACBs actually doesn't improve, which is the weakest link here, I think the optimal benefits of increase in coal production may not fructify in a manner that one may anticipate. So I'm quite hopeful that the manner in which the sectoral changes are happening, I think over the next 18 months, the first leg of benefits should definitely should actually be visible in the earnings of some of these companies.
Okay, that's a fair point. As the Coal Secretary was telling us earlier in the day, the key issue is really of dispatch. And on this subject of rake availability, they are doing a lot of work. In your assessment, because of the addition of rail linkages, how much could the production go up by?
Well, there are three key railway routes, and as Pragya was pointing out earlier, if these railway routes are actually fixed up on a priority basis, these itself can add something like about 100 million ton of incremental production into the overall system. The new routes may not directly be added. I think even if debottlenecking is done on the key routes, and if wagon availability is ensured, the offtake can definitely go up. And I think the biggest challenge for the government is going to be how to have seamless coordination between the three legs, that is the ministry, the coal, the Ministry of Railways and Ministry of Power. Now hopefully at least the two legs are headed by one single person. The confusion that we saw earlier should not be repeated even from here on.
Okay. I'll come to your, you spoke about some stocks, NTPC, CESC, etc. I'll come to your target prices in a bit. But before that, what did you make of the clarifications of the upcoming coal block auctions, the comments that came in from the Coal Secretary?
Well, these are very positive, and the manner in which the government is going ahead with the auctioning or the overall auction process, that is very encouraging. And it appears that by FY16, at least by second quarter, when all these formalities are completed, the production more or less should be unaffected from these 42 coal blocks. And we may not need to actually import, which was the key fear in the mind of a lot of the industry players. So from a systemic perspective, I think FY16, the offtake or other production from the existing coal blocks, that should be at least maintained in the base case scenario. The document also provides that the mining plan could be changed and the production could be enhanced. And we keenly look forward for such unique cases whereby the ministry itself encourages people to, extract more coal and use it for captive consumption. So we are quite upbeat in the manner in which these coal auctions are actually progressing.
Okay. Since we're running out of time, I'm quickly going to ask you a couple of questions before we wrap up, Harsh. I know you track Power Grid very closely, and Power Grid has received some additional projects on a nomination basis. Can you tell us, do you have any clarity on the timelines and what the dilution risk, etc. would be, and how would you rate the stock now?
We did have a word with the management of Power Grid recently, and we received a clarification that these projects, 36,000 crore projects, these are over and above the 1,10,000 crore projects that the company is executing, and that is a big booster for the company. In terms of timelines, the projects are to be executed over the next 36 months, and ordering for the same should happen over the next, I think, 6 to 8 months. Once the board clears these projects and the detailed feasibility reports are etc. in place. To us, Power Grid is the best risk-adjusted play on the coal as well as the power sector reforms which are currently happening, and we see that stock as the best proxy to play both the coal as well as power theme, adjusting for the risk that one is taking right now.
Okay, fair enough. So Power Grid is the best proxy to play this theme. You also spoke about NTPC and CESC a while back. So just trying to get a sense of what are your top picks in the power sector now, and what kind of target prices have you ascribed to these stocks?
Power Grid is our top pick, and our fair value for the stock over the next 12 months is close to about 165 rupees a share. In the private side, we like CESC, and we think that commissioning of Haldia and Chandrapur, that should lead to almost 30% earnings CAGR from here till about FY17. And the good part is the overhang of dilution is already behind. And with the other subsidiary, the businesses that which were earlier loss-making turning around, I think the earnings are well poised to grow at 25 to 30%. The valuations are at a discount to the fair value. And on the private side, CESC is our preferred pick.
All right, we'll leave it at that, Harsh. Thanks so much for joining us and taking us through your top picks in the power space, and of course the way many of these power companies will now benefit from the eventual higher production from Coal India.